Hey traders, we'll be getting started in just a moment. Please take a minute to read this disclaimer. All right. Good morning, traders, and welcome to the weekly technical outlook. Today is Monday, June 1st, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys and the start of a brand new month. We saw a pretty decent performance last month. You know, the S&P closed up 5%, NASDAQ up 8.4%, Dow up 2.8%, record highs on all three. And we find ourselves at a very interesting juncture. The US dollar is running into a major resistance we've been testing for 3 weeks now. A lot of ranges in play. On the menu for today, we'll hit the DXY, Euro, Sterling, Aussie, Dollar CAD, Dollar Yen, Dollar Swiss, Gold, oil. Really quick look at oil and Bitcoin. I see all your questions. Hey, Jose, Roland, great to see you, sir. Febby, Iman, good morning and happy Monday to you as well. Any questions or trade setups, as always, guys, feel free to throw them on the message board at any time. Special welcome to our YouTube visitors. If you'd like, there's a link to the GoToWebinar session in the description box below at any point. If you'd like to jump into the live session, ask any questions. Let's jump right in. So here's what the DXY looked like on our last update on the weekly charts. And here's what it looks like now. So the focus was the support zone at 97.50, 97.65. I was pretty darn close to the lows that we made back there in April. 2 weeks ago, 3 weeks ago, we dropped into there again. We defended that zone. That's when we wrote this report. And we were looking for that pop through the yearly moving average to give us the rally towards 99.50. That was the next major hurdle. That's the objective 618 of the drop. And that's the objective January swing high. Not Mike Boutros' opinion, not FOREX.com's opinion. Fact. We rallied into it that next week. And ever since, we've been sitting just below. So that's the hurdle the bulls need to surmount to get us back into a pivotal resistance at the yearly open. That's the at the yearly highs. That's the 2024 low week close, the 2024 low. This year's high week closes in there. You've got the highs from back there in November, and even that swing high from July back there. That's your sort of major resistance at the yearly range high. But this is your first hurdle. So the rally off that support zone is vulnerable below 99.50, and that doesn't change. So fast forward, quick reminder, anyone who's new to the room, on every report, I have the technical forecast, which is your weekly report. And in the short-term update, which will give you the daily and 4-hour chart on each asset, our multi-time frame approach. The last one here was written on the 21st of the month. We had already broken out of that March downtrend, and there was 99.50. January high, 618. Also was uptrend resistance. So when we published this on the 20th, we said, yo, red flag, there's some divergence. We're heading into resistance. The rally's vulnerable below 99.50. Look for the pullback. We're still constructed well above the 200-day moving average, while above that August high day close, the May low, 98.69. Well, we just dropped right into it. Here's the live chart looks like now. Daily. And here's the side-by-side comparison. So nearly a week and a half later, almost 2 weeks later, right? We dropped, we tested it again right here on Thursday. And when we made that test on Thursday, guys, we marked an outside daily reversal off the monthly high. Typically an exhaustive move. So the threat now becomes, whoa, well, if this is an exhaustive pump into resistance, Well, then if we buckle back below support, you're looking for the potential of a much larger dollar correction. That all being said, we open up the month, we open up the week right above slope support. Here's what it looks like on a closed basis. You can't make this up. So we're right there. Drill down deeper. Here's the 4-hour chart. And here's what the 4-hour chart looked like a few weeks ago. Same slope, nothing changed. We failed there at resistance. We dropped and turned right ahead of support, and we're trading just above that slope right now. So here's the live chart. This is last week's low, okay? We broke it on Friday. So remember, the weekly opening range was preserved. That Thursday high low was still in the monthly, was still in the weekly range. We broke it on Friday, but we closed right back there. And in fact, 98, actually it's 99 proper, 99.05 is now the objective weekly open, the objective monthly open. We're right there. So DXY sitting right above slope support. The lateral level that matters is right down here at the 200-day moving average. That's 98.58, 98.68, 10 pip zone. A break below that would suggest the potential for a much larger kickback. Yearly open is 98.23. The low we closed from last year is 97.65. Now, key resistance is still 99.50, and the break there still opens up 100, spot 15 into 35. But this is the range breakout we're looking for right early into the start of the month and the week. Key support 98.68, 98.58. Now we have a lot of event risk on tap right into the start of the month, right? We're starting off with ISM manufacturing PMI data later today at 10 a.m. After this webinar is completed. We're looking for a print of 52.6, slightly off of 52.7. Don't think you'll get too much off that. But obviously, the war headlines in Iran continue to remain central focus because of the duration problem. And we've been saying this for months. The problem is not necessarily, the problem remains squarely on how long this situation lasts. We have a lag effect, right? Where there's a lot of oil floating around on the oceans that still needs to be delivered. There hasn't been too much disruption per se to actual production, but now you're starting to get into that lag where all the storage supplies are exhausted, and we're going to start to run into a major supply problem. So the pressure's on. Everyone's waiting on every single war headline. That's primary focus, geopolitical side. Economics data side, we have ADP data on Wednesday, right? We're looking for a print of 116,000 for private sector payroll. That's pretty darn good. We got 109 the previous month. Non-farm payrolls on Friday, the more encompassing government figures, that's supposed to show a print of 96,000, and a previous read was 115. So remember, we're kind of normalizing now with the labor data, where anywhere from 60 to 100 is pretty much in the range of keeping things afloat, right? We're at 4.3% unemployment. Participation rate is pretty decent. We did see a slight uptick a few months ago, but pretty much the labor markets are pretty well sustained. We've gotten some decent weekly jobless claims. So as long as there's not a big interruption to the jobs data, things are going to stay where they are right now. And as it stands right now, guys, markets are still slightly favoring. It's basically 50-50, but potential favoring at least 25 basis points over the next into the close of the year, into December. January, you're priced in at nearly 60% that you'll have a 25 basis point hike. So the biggest interruption to that outlook would be some sort of disruption, some sort of weakness in the labor markets. And we just haven't seen that yet, which is why Friday's print is going to be all the more important. Gentry says, just curious, does the 20-year Treasury and the DXY positive or negative correlation, or how is the 20-year helping the dollar? So certainly higher rates typically will be better for the dollar. We've seen that rally in rates start to trim a little bit. Here's the 10-year, okay? We pushed a couple of weeks ago through that 457 level. That was last year's open, and the swing highs they made back there in May, basic trendline resistance, you didn't really punch through it. So the rally to fresh multi-year highs and yields, maybe that story abates a little bit near term, but that's still definitely a risk, right? You are seeing a little bit of an exhaustion play here on that last pump, but anyway we pull back, you have support at 430, and then the 200-day excuse me, the 52 week at 423. Still think it's a constructive trade. Still think this broke the yearly opening range, Gentry. So that's broadly supportive for the dollar, but it's not a tick for tick, right? Here's the 30-year. That tapped the 2023 swing high and actually bested it intraday before quickly pulling back and settling back below 5. So that's kind of like your line in the sand psychological barrier. It's the 618 extension off the low. It's the high week reversal close from back in 2023. There's a lot there. So I think the immediate like sort of upside thrust you were seeing in yields is kind of abating right now. That puts a little bit of a quiet tone on the DXY. Does that make sense, Gentry? All right, euro dollar. So euro sitting right above support. We saw that bounce last week. Let's go through the through the time frames. Here's the weekly, and here was our last weekly update on euro dollar on FOREX.com. This was published back on the 30th. So, this came out just last week. And the focus was, hey, we came into support, watch for a reaction off 1578, 1598. Okay, 20 pip zone. It's the January close low. It's the 618 of the rally. And it's that low that you registered right in that last swing. We dropped right into it. Here's the recovery. Now, the focus has been that 52-week moving average. You have a lot of resistance overhead on the near-term charts, but we couldn't close above it last week. So we can't validate necessarily the extension, the recovery off that level. But that's the key level on the weekly charts from 1,000 feet up. Okay, so that's the rebound that we're working with right now. We're just below the 52-week moving average. Our last short-term update highlighted that we had kind of just made a 5-day sell-off and we were heading into major support. That was this zone right here. Okay, this was written a little bit earlier. Here's the live chart looks like now. Got a really nice reaction off that, right as expected. The level is 1578, 1598, same zone. We dropped right into it and rebounded right off that 618 down there. Here's the recovery. So a basic 38.2 gives you 1680 off the high. The 200-day moving average is right there at 1683. Remember, the 52-week moving average is right there at 1670 and change. So you're working with a lot of like moving average overhead slope resistance, the 38.2, the drop. Here's the rally. Here's the pump right there. We're trading right below it. This is your focal range break into the start of the month. South of 1578, that would likely be DXY north of 99.50. But if we were to get that break, there's a big potential for much larger declines towards 1480. That's key support. If we pop here, bearish invalidation is a little bit higher, right up here. The objective yearly open, the 618 of the most recent drop from April, slope resistance. Remember, this is the 618 of that range for the pitchfork. Caught resistance, that converges there. That's your bearish inval. Okay, that's the level that would suggest a more significant low is in place and the potential for a larger breakout in euro. But until we do, that's still key resistance. That's still key support. Initial resistance right into the start of the month, just below 1680. Drill down even deeper. Here's euro dollar. You do have inflation data, by the way, on tap tomorrow. You have retail sales on tap Thursday. That's aside from obviously Wednesday's ADP report in the US and non-farm payrolls on Friday. But here's the bounce off support, bounce off support, bounce off support. Break above the median line. This is the same slope we've been tracking. I didn't think we had it back here. Yeah, it is. Same slope we've been tracking. So we just dropped into the lower parallel and rebounded. We broke the median line. So it suggests, there is some upside thrust. There's the 200-day moving average. There's the 38.2. That's initial resistance. The 50 comes in just on that slope, a little bit higher. I just wanted to highlight that, but that's your bearish inval. Big resistance, big support. Watch euro dollar early in the month. Topside exhaustion. If everything's going to head constant, if we're heading lower on euro dollar in the weeks ahead, rallies need to be limited essentially by 1731, 1745. Key support 1598, 1578. Questions on euro? All right, that's number 2. Sterling, it's still not my favorite, but here's what it looks like. So the problem with pound is it kind of lost momentum and it's right below resistance. So the focus of the last update here, this was published back on the 28th, was, hey, look, we're trading right below the objective yearly open. That's 34.74. And then just below the 618, a bit higher, that's 35.22. So look for a reaction there. You have slope resistance there. I'm looking for some sort of inflection there. We're still trading right below that zone. So the long bias is vulnerable sub 35.22. I don't want to buy into resistance. There's no justification in me trying to take a long dollar position just yet and try to short this. So I don't really have a strong directional bias on British pound right now. It's on the watch list, but key levels to watch on the weekly charts are still 34.74 and 35.22 is resistance. Support 32.66. We haven't hit it yet, but it's the 786 of the advance. Upslope supports there. That's weekly support. So it kind of puts you in a position where you're not really turned on by the weekly charts. But let's drill down deeper. Here's the daily. And here's our last daily update on FOREX.com. This was written a while ago. This was back on the 6th. We were just setting up the weekly and monthly opening range right below that 618 and the monthly open. We spent a while there, okay? That did end up being the monthly range high. And when it broke on May 14th, we did look for a late month low. We got it right here on the 18th. The recovery taking us right back into this pivot zone. The yearly open, the February low day close, objectively a clear pivot in price, right, over the course of this year. So what do you do here? The 618 is just overhead. Remember, the weekly charts has that slope right there as well. Not my favorite setup. Here's the 4-hour chart, and this is just the slope we've been working with. Remember, this slope was just eyed out basically on the basic premise of that support slope. Nothing fancy here. It's not an objective high, low, high, or anything like that. So there's the 618 right on downtrend resistance. Like that's bearish inval. This is initial resistance. Here's support 33.50, and then we need to close below 32.60 to mark resumption. So it's a low conviction trade. You're straddling the 200-day moving average, looking for a little bit more of a tell. You don't have much UK data. You have a bunch of speeches this week from Governor Bailey, like almost every day. But the focus is going to be really on what happens right into the start of the week, on whether that rally can really sustain a break above 35.22, or if the bears fail ahead of that zone and take you back below that 200-day moving average, maybe for a retest of the 618. But that's the British pound right now. More to be desired. More to be desired. We'll continue to follow this one closely this week. Here's Aussie dollar. So the rally, again, failing right ahead of 72. Let me take you all the way from the front here. So 72, it's been the tail for Aussie dollar since the start of the year. We had a really strong breakout. The update I gave you on this was the 21st of last month. It was a trifecta update with a video update and the charts. And the focus was, listen, we pivoted above 72. Turned right ahead of uptrend resistance, then massive reversal candle took us back below 72. So the focus after we wrote this report was, hey, that pullback came into a 38.2 retracement. Look for some recovery off that level. You have the median line there. You have the 38.2 retracement, a couple of swing lows. If you get a recovery, you're still vulnerable below 72 for a deeper correction because we came up uptrend resistance. You want to take maybe a test of uptrend support. So we got that rebound last week, right? And it rallied. We failed right ahead of 72. And that's where we find ourselves right into the start of the month. So the threat is, yeah, we could still see a test of 72, but the long bias still remains vulnerable below 72. That's the line in the sand. It's still in a very strong uptrend. No one's denying that. We talked about the divergence that we were making into those highs as price action made a higher high, the oscillator made a lower high. So the question is, how deep does the correction get? Do you think Aussie weakness or dollar strength, Mike says, Chandra? So that's the focus from the weekly chart. The weekly chart would suggest, from a technical standpoint, right? Not a trade recommendation, as always, guys, from FOREX.com or StoneX, my humble interpretation of the technicals, suggests that there is still a threat for a pullback within the broader uptrend. Okay, this is a very strong uptrend. No one's denying that. But failure ahead of that zone suggests that we might get a pullback. Now we're just setting up the monthly opening range. So all things held constant, that's sort of the picture from 1,000 feet up. Drill down deeper. Here's Aussie on the daily chart. And here's our last Aussie on the daily chart here on FOREX.com. This was published back on the 27th. And the focus was, hey, we're looking like we broke the monthly range, but there's the 38 too. It's 71.08. Look for a reaction there. You're still basically bearish below 72. Here's the live chart. Okay. Friday's high, guys, was 72 proper, 72.08. Guess where that retracement is? 72.08 into 72.13. Like insane, right? So that suggests to me we're opening up the month, Chandra, right below resistance. If you buckle above 72.13, that's a breakout. But as long as you're holding that zone, that's still a threat that you get a deeper corrective 1, 2, 3 type of Elliott correction before you resume. But we don't have that justification just yet, right? So the daily charts remain unchanged. What did the 4-hour chart look like? Well, we tacked on this basic slope, okay? And it looked pretty convincing. Guess where the upper parallel came in? 72.08, 72.13. Guys, here's the live charts now. Okay. Here's the high, 72.08. There's last month's open. That's what those dots are. You see those dots right there? The region of resistance we highlighted was 72.08 into, or 72 proper into 72.13. It's exactly where this thing popped. Failure, pullback. So we're still in this downtrend. That's bearish invalidation. If Aussie is heading lower on this stretch, rallies would need to be limited by 72.13. You need to break below 71.08 to mark resumption. You're looking for a downside move towards 70.50, 70 proper. If we break and close northbound of 72.13, that's a breakout. And Chandra, that would be your bullish sort of scenario, right? The high close comes in at 72.58. You're looking for 73 all day long after that. But the levels are very well defined in Aussie. We noted the threat for the downside well above 71. Now the threat for the upside remains well below 72.13. Make sense? Aussie, pretty clear on data this week as well. Watch for US dollar price action and broader sentiment to really be driving things here for most of the week. All right, dollar CAD. So holding on by the skin of its teeth. Here's dollar CAD first on the weekly chart. The broader picture here was that we pivoted above a major zone of resistance. It was a pivot zone. Former support, turned resistance. We broke through it. That level was the objective yearly open. Last year's objective low week reversal close. 37.24 into 37.33. Huge pivot zone all year long. The second we popped through it that week, we said, hey, that's a breakout. We marked the weekly close above it, looking higher, right? You got the 52-week moving average. You got the 618 retracement of the drop. You're looking at 37.90s into 38.08. Well, 3 weeks later, 4 weeks later almost, we're still trading in that same exact zone. Dollar CAD straddling the 38 handle. Chandra said, thank you so much, Mike, for the clean explanation. You're more than welcome, mate. Cheers. So Aussie dollar is just sitting there. It's, dollar CAD sitting there. It's stuck right at that 38, right at that 618 retracement, right at the 52-week moving average. That's what the blue line is. We've been sitting there for 3 weeks. All right. So where does that leave us, Mike? Well, here's the short-term outlook. This was published back on the 20th, and we had already broken above it. And we said, look, there's the break. There's channel resistance there. There's a risk as you head into 38, but you're constructed well above the yearly open, the 38.2 retracement of the November decline, 37.24, 37.33. Here's the live chart now. Okay, so that held. Subsequent pullbacks from that slope resistance held support. We rallied into 38.08. Here we are. On Thursday, we marked a massive outside day reversal candle, suggesting that the immediate rally may be vulnerable now. So where does that leave us into the start of the month? That's still the same case, guys. This is still a constructive trade. You don't have any momentum divergence. You don't have any breaks back from overbought condition to kind of give you the signal. So you're kind of sitting here thinking maybe we get a deeper cutback, but you're still constructed well above 37.25, 37.33. Nothing changes. You drill down deeper. Here's the 4-hour chart. And here's what the 4-hour chart looked like a few weeks back, guys. It's the same slope. Okay, we rallied through the median line. We turned right ahead of that 786 retracement, and we're trading right above slope support. Look at this. On Thursday, I told you guys on the opening bell, if we break below the 200-day moving average, we're kind of like we want to be neutral. So it broke below the 200-day moving average, it rallied back above it, it broke back below it, and then we closed right below it, right below those weekly range lows that we made, right above rather the weekly range lows. So you're hanging by the skin of your teeth. It's the same slope. I haven't changed a darn thing. We just caught slope support. Is that resumption? Well, for that to be the scenario, you need to break 38.78. If you break 38.78, you're right up onto that key resistance zone near 39.40s. But if that outside day reversal range breaks to the downside, you're threatening another test of 37.33. So for dollar CAD, listen, it's very event risk driven week. Obviously, again, the Iran headlines come first. Then you have ADP. Then on Friday, you get a double whammy jobs report. You get the non-farm payroll report from the US and Canadian employment change figures at the same time at 8:30 Eastern on Friday morning. So potential for a nice little catalyst into the close of the week early in the monthly opening range here on dollar CAD. Technically, you're still constructive while above this slope, but on the back of that exhaustion candle, the threat is that you get a deeper cutback before resumption. So it's early in the month. Remember, the monthly opening ranges, the weekly opening ranges are just taking shape. I love when the opening range happens on a Monday, guys, when you just start off the month, keeps things nice and tidy. We'll be tracking this every single morning, guys, in the opening bell. Quick reminder, the opening bell is now open to all US clients. So if you should have received an email with the link for that. If you don't catch it live, for everyone else in the world, it's published every single day on FOREX.com on our YouTube channel right after the session ends by about 45 minutes, an hour. But that's usually up by 11 o'clock, the opening bell. So we'll be tracking this one, but the focus is whether the support holds here early in the week or whether the break unleashes a larger downside break towards that yearly open. So tentatively constructive, but it looks vulnerable near term on dollar CAD. Employment, big data dump on Friday. Dollar yen. So it's right at resistance, and it's the same resistance zone we've been talking about for a while. It's 59.50. I'm working with the outside day reversal. There's a lot of outside day reversals that happened on Thursday, specifically one that was right here in dollar yen. This is actually one of the more ones I'm interested in. Whenever these happen, I always tell you guys, I always try to remind you guys, whenever I see an outside day reversal candle, the kind of major focus, the quick near-term play is to look for a break of that candle's range for guidance. So, I'm basically looking for a break of Thursday's candle for range for guidance. Now, the candle high comes in right near resistance anyway, so that's even better, 59.50. We're trading into that right now. A breakout, key resistance is still 60.21. I kind of jumped to the daily charts here because it's an ugly chart, but let me take you through all the time frames. Here's dollar yen on the weekly. This was highlighted back on the 5th. It's been a while, but nothing's really changed. All we highlighted back into the start of May was, hey, 55.40, 54.79 is key support. Plain and simple, exclamation point, end of paragraph. We're looking for a reaction off that mark. Uptrend support is validated by that region. Well, we got a pretty strong reaction. And it pumped and it broke right through that 618, which is now near-term support. Here's the live chart, right? Nothing changed. Exact same setup. Side-by-side comparison. We came into that zone, held as support. We rallied right off that. Here's the 618. We broke through it a week later, and it's been support for the last 2 weeks. You drill down, here was our last dollar yen short-term update. This was written on the 22nd. The focus was, hey, we broke through that 618. Look for support there. This is the range of influence. 59.50, 58.50, just 100 pips. Let's look for a breakout of that zone for guidance. Here's key resistance. Here's bullish inbound. The monthly opening range had broken, so we were looking for a late month high, and we got it. Okay, here's the daily chart now. Here's the breakout. Well, ever since, we've been sitting in this exact range. So the top side looks a little tired. It's not like, let me take a step back. If we close today's candle here, it would be interpreted as divergence because there's not a new high in the oscillator while the price action looks like it wants to make a new high. But basically, RSI plateauing near 60 is the hallmark of like the hold. So we're right at resistance. RSI is just below 60. We're looking for a reaction. Drill down deeper. Here's the 4-hour chart, and here's the 4-hour chart as it was back then. Same slope. We're trading right below that 786 retracement. Okay. So real near term, technically, you're constructive while above the median line, but initial support is 58.55, bullish inval 57.90. Topside breach and a close, okay? Northbound to 59.50 marks resumption, but you're still, key resistance still 60.21, 60.73 all day long. The yearly highs are up there, the 2024 April high and the 2024 high week close. All of it converge in that zone, right on uptrend resistance into Wednesday. So levels are pretty well mapped out here on dollar yen. Momentum has been pitiful. We're waiting for a near-term range breakout. But the immediate long side bias vulnerable below 59.50, constructive broadly speaking above 57.70. Questions on dollar yen? All right, Swissy. Here's what Swissy looks like. So a little bit of an interesting trade here. I kind of lost focus on this roll in last week, but it's just kind of a range bound position on the longer term, which is why I'm not really a big fan. But this is what I'm looking at. So we really well documented the rebound off key support, right? We highlighted that ahead of the bounce. So this was highlighted back on the 19th. And we were talking about, that's the short term. Here's the long term. This was highlighted back on the 4th, of May. And we were talking about this big support zone at 77.72, 77.68. Big support zone. Okay, that slope did break, but the key support lateral held. You can see what a major pivot that's been. It's the 618 off the rally off the low, and it's the objective 2021 swing. 2011 low week close. Okay, so a decade right there. We rebounded off it, and then ever since we failed right ahead of resistance. But then we've just been kind of like gyrating. So what do you do with this trade? You're right in the middle of a big range. 79.27 is the yearly open. That's resistance tested twice already, 3 times. Key support 77.72. So I find myself, I don't, favor getting in like mid-range like this. What do you do here? So that's my problem with dollar Swiss. And when the weekly chart turns me off, typically the daily chart, I won't drill much deeper, but here was our last update. Okay, this is the one that was on the 23rd. This is a little bit more recent. I'm sorry, this was on the 19th. This is a little bit more recent. We were talking about the potential of this being a near-term breakout, right? That fizzled out real quick. In fact, it was later that day that we just quickly reversed and pulled right back. So I'm not a big fan of what we do with dollar Swiss here. I'm not really a big fan. It's just not a clean chart. Here's the 4-hour. Even that downslope that we were following broke, but then what's this? Back in, back out. Is this a defense? Listen, if we've broken the downtrend from March, losses need to be limited by 78. Let's just put that there. The monthly open from last month was right there at 78.14. The April low day close is right there. The 618 of the near-term rally off the yearly low, off the low from May is right there as well. So like if we're heading lower, and that was what we said for the last couple of days, I'm actually surprised. I haven't looked at this morning to see this bounce, but that was the line in the sand. Friday, we attempted a break below and we didn't. So we closed right there. So here's the rally. If dollar Swiss is heading higher, the only thing I would say is I would want to see support at 78. But for the bears to maintain or to gain control, you would need to see weakness below 77, 72, 77, 75. Okay. Does that make sense? Initial resistance 78.75 into 78.73. Key resistance 79.25. That's the yearly open. That's the 618 of the drop. That's the 200-day moving average. It's all up there. But you're kind of sitting mid-range here, so I want to see the bulls really step in. All right, that is dollar Swiss. That's all the FX crosses I have. He says, cool, thanks on Swissy and yen. You're more than welcome. That is the FX crosses. Let's jump into gold, and then we'll look at the equity markets real quick, and we'll call it a day. Here's what gold looks like. So we are testing, what do I want to say on gold? There is the potential that a more significant low was registered. I made this argument last week in the opening bell, and I'll make it again. Look, it could be wrong, but the hallmarks are there. So the focus on gold has been this key 44.92 into 45.33. Absolutely oh, this is the daily chart. Let me show you the weekly. Absolutely critical. Why? What's there? Well, it's the 2026 low week close. We registered it back in March. We registered a new low for the year. We closed right there. It's been support. It's the objective 2025 high close registered in December. Not Mike Boutros' opinion, not FOREX.com's opinion, fact. So we said, hey, that's key support from here on out. If we close a week below that, you're looking for a test of the yearly open. You're looking 43.20s. Okay. The 52-week moving average takes you like 42. But this is huge. What happened last week? We closed, or we broke it, and we dropped as low as 43.69. And then we closed right back there. So on a close basis, we're still trading right at support, guys. Okay. That's the picture from 1,000 feet up. If you're only looking at line charts, you're only looking at the weekly closes, gold is sitting at support. But let's look deeper in onto the mechanics of what happened last week. That's where our multi-time frame analysis approach really shines. So here's our last gold short-term update. This was highlighted back on the 28th, right? We had noted, hey, is a low in place? And that was the argument that I made last week. Why did we make that argument on the day the low registered? Couple of reasons. When and where it happened. 43.83 into 44.06. You have the objective 100% extension from the decline off the highs you made back in April. Cool. You have the 618 of the rally off the yearly low. You all know in this room, those are my favorite Fibonacci confluences. 100 off the high, 618 off the low, or vice versa, right there. It's also the objective low day close for the year. Not Mike Boutros' opinion, fact. Also, just in case that wasn't enough, the 200-day moving average was right there. So the reaction you got off that day was you closed that session. Don't quote me. I think it was 5% off the low. No, I'm way off. 2.6% off the low just on that day. By Friday, you were almost 4% off the low. You had stretched into 5% off the low at one point. So when, where, and the reaction you got pretty much entails, there's from the high to low, 5.2%, suggests that a much more significant reaction happened. Something more significant happened there. Is there something else that we can point to? Sure is. Downtrend support. This is the same slope we've been tracking. Okay, here's what it looked like before. Same slope we've been tracking. And a quick reminder to anyone who's new in the room, on every single one of my reports in the first paragraph, you'll find a link to the previous update so you can see how we've been faring on the specific asset. There's no shortage of opinions online. I believe in 100% transparency so you guys can kind of gauge how we've been dealing with it. So we dropped right into that support zone. Here was the slope, the 4-hour slope, right off the objective, high, low, high, the median line, support was right there. And so then we rebounded. So what do we say? We said, hey, if we close northbound to 45.33, that's a breakout. That's a breakout. Look what happened on Friday. We closed at 45.40. So what is that? Is that a break? You know what I'm saying? Like, if it's a break, I wanted to see some follow through. I'm not getting any follow through. So it's very tenuous for gold early in the week, early in the month. If a more significant low is registered there, a basic 618 of this near-term rally puts 44.54 as sort of a line in the sand. If this is a more significant low, I'd want to see this support hold, and I want to maintain, sustain, and stabilize above 45.33. If we break below 43.83, sayonara, you're done. Okay, there's a lot more downside. You're looking at 43.19. The median line converges on the next major level at 42.50, basically on Friday. So it's do or die for gold after a reaction at key support in price, in time. Watch this early in the month, early in the week. Gold tempting a low here. Okay, Zynep asking, can we do a zoom on silver? I haven't actually looked at silver in a few weeks. Looks like we were watching some slope here. Here's slope resistance. Looks like potential break. So look, silver is coming off of key support, plain and simple. Silver is a little bit more of a basic setup, Zynep, in my humble opinion, because last month's opening range never broke. Here's last month's open. You set a low. You set a high in the first 13 days. It kept on stretching. It was a pretty stretched 7-day rally, I think. And then we came back. Here's monthly open support. Here's monthly open support. You're trading right above last month's low and last month's open. So that's one thing I'd look at. Also, 7180 is the basic set 618 of the advance off the March lows. So once again, a pivot zone. Support, support, last month's open. Support, support, 7180 into 74, support on silver. You don't have quite the dynamic in silver of the justification that something significant happened last week as much as in gold. Just my humble opinion. So that in and of itself could be a non-confirmation low, which means that either silver will catch up or a low is in and gold's going to rally. So we'll see. We'll see how that pans out. I don't think it's quite as clear a picture. Let me look at silver on the weekly chart just for a second. Yeah, that's consolidation all day long. That's consolidation all day long. All right. Oil. So here's what oil looks like amidst everything that's going on. Look, so the pivot that we've been talking about since the start of May was 90.79 to 91.78. That's the 2023 high day close and the 2023 high week close. Again, not my Boutros' opinion, factual levels. So you can see some pretty nice, decent pivot zones there. So we closed below it on Wednesday. It kept us on a downside trajectory, but we highlighted the critical zone of support, which would validate the end, okay, at least in a technical term of this debacle since March, is 85. 85 is such an objective zone, guys. That's the high day close for the year. The day the high was registered, the close of that session was 85. After that, the low we registered later that month was near 85. The following month, in April, the low day close was 85. That now converges on basic consolidation support. So, even when this level broke, we said, hey, maybe we get the stretch to 85, but that's the one that really needs to buckle. Here we are back at that level. So I'm looking for reaction here. There is, reports overnight that there's been more skirmishes, kinetic forces going back and forth and overnight. One side claiming self-defense, the other, blah, blah, blah. We're going to continue to see this. The leadership is very disjointed in Iran right now. So dissemination of orders is getting all jangled and jumbled up. So I can understand giving the administration the benefit of the doubt for now, but the resolution needs to be at hand. Let's just say that. If we pop and close back above it, it puts you back into like the consolidation danger zone where you could see 101 and 90 again in just a matter of days. But I am looking for a pivot here. 85 is the level that would need to break. Here's a near-term structure I was just looking at earlier today. I have no way of knowing if there's any merit to this slope just yet, but it puts the median line here at, again, 90.79, 90, 91.78. Here's 101, 101.50. You guys all know about this level. We've been talking about it since the crisis started. That's the break that would put you back in crisis mode. Okay, 85, right along the 25% parallel. If that breaks, you're looking for a resumption of that downtrend. You're looking for 80. You're looking for 79.60. But right here, right now, we're testing a pivot. And if we pop 91.78, you go neutral again. This could get messy again. It means market sentiment might be getting a little out of hand again. Very sensitive. We're very sensitive to headlines here on this. So keep your eyes on that. Bitcoin. Oh boy. So the breakdown is now approaching the key lateral level. Here's our last update on Bitcoin. This was published not too long ago. This was 29th, just last week. And we'd said, hey, we were coming into major resistance. Here's the link to the previous update. We've been talking about 81 for a while, right into the start of May. We were saying, hey, rally's been great. It's a great breakout. 81 starts to run into some major problems. That's 100% extension off the low. That's uptrend resistance. Here's what it looks like. On a weekly basis, you did mark one weekly close above, but we quickly reversed the following week, moved lower. That gave us the validation that that was an exhaustion high. Here was last week's update. We had tested uptrend resistance. Here's uptrend support. The major level on the weekly chart is 70,283. That's the low week close for the year that we registered back in February. And that would necessitate a break of the uptrend. Zoom in. Here's what the daily chart looked like. Really nice pitchfork we've been working with. Objective, low, high, low off the yearly low. Little messy on the upside there, but it looked provocative. You had some divergence. There was the breakdown below the median line. There was the break of the monthly opening range. Late in the month, you registered a late month low. So you're starting this month down here. Here's the live chart now. You're starting this month down here. Okay? Okay, let me put it this way. Initial resistance right back at former support. 74,434 into 76,159. The fact that we broke below that keeps the focus lower while below that zone. Bearish invalidation is up at 78,000. If we break that high, that was a multi-week high, it takes us through the median line, that would suggest a more significant lows in place. Okay, that's bearish inval, initial resistance. Initial support, look for that slope, okay? It's variable based on time. Right now, it comes in right above 71,300, but the major lateral level is 70,283, 70,531. The low day close and the low week close. A close below this zone, guys, would open up the potential that Bitcoin has a much lower low to register before this correction, before this crypto winter is over. So this is the first major test. 70,283, 70,531, critical for Bitcoin over the next few days. Look for a reaction there. Initial resistance, 76,159, bearish inval, 78,000. Bitcoin levels, absolutely clear right into the start of the month, approaching uptrend support. Questions on Bitcoin? All right. Got about 13 minutes left. Let's take a quick walk through the equity indices and we'll call it a day. So here's what's going on with the breakout as we continue to stretch to brand new fresh record highs. I worked up some levels a little bit over the last couple of days. Obviously into record highs, guys, whenever you're at fresh record highs, you're always having to use previous price action to get measured moves to find objective levels that you're searching for. The one that we've been watching for a while, and here was our last update, by the way. Actually, no, it was long ago. It's been over a month now. The level that we've been highlighting for a while, the two levels was 74.48. That held for a week. And we broke through it a couple of weeks ago. That's now initial support. And then 76.77. We haven't made that quite yet. That's the 618 extension from the advance off last year's low. So we're kind of right here in no man's land, but it's a break of multi-year uptrend resistance. People are always asking, how long can the trend go? Are we overbought? We may be approaching that. I will grant you that. But it's important to note where we are in the technical scheme of things. A break of uptrend resistance, oftentimes the sharpest part of the rally. A break of the yearly opening range has us looking for a late year high. Earnings have been good, right? The damper is the geopolitical risk. The damper is the expectation that the Fed may be hiking, right? But all things held constant, labor market seems strong. The AI story is probably in inning 4, maybe late inning 3, right? So we don't want to cry wolf just yet. We are reaching a point, though, guys, where earnings and where we are right now and the depth of the market, it's a little stretched and the risk is there. You're starting to hear on all the financial news publications. That's not necessarily when the market turns, actually. You got to get a little bit less of those, right? You got to get a hated rally, basically. But 76, that's all to say. 77 is the next big level on the upside. Here's the S&P 500, by the way, on the daily chart, and then the intraday chart. This slope, it's been clean. I don't know if there's any merit to it. I'm just marrying the highs that we made in January and the high that we made last month with the basic trend line. And if you match that slope, you have really nice median line break, really nice 75% parallel break. Here's the upper parallel. Here's the upper parallel. So the immediate front, yeah, there's divergence. It's in overbought condition, so that's not a strong divergence signal for me. That's actually a weak one, but it is divergence nonetheless. Price action has made a higher high. The oscillator has not validated a new extreme in price. So maybe near term into the start of the month, it does look a little vulnerable. Drill down even deeper. Here's the 4-hour chart. This is a more objective slope. This is just an objective low, high, low. I haven't changed anything on this since March. And you can see it's been insane, right? Median line, support, median line, support, break, resistance, resistance. It's been textbook. So even in that facet, from that view, you're still kind of mid-range here. You're not near support, not near resistance. Here's the monthly open. So for the S&P 500, look, slope support comes in right near 75.30s. I want to see a hold above 74.48 if the S&P is heading higher on this stretch. Next major level of resistance would be 76.77. That converges on the median line into Tuesday. That's the breakout you would need to really fuel the next major leg of the advance in the S&P 500. Does that make sense? So that's my thought process with where we are here on the S&P on all three time frames. Looking at the Dow, or the NASDAQ rather, looks also that it's mid breakout. This is a pitchfork we've been tracking for a while too. The 25%, the 75% parallel broke last week, and here's the pump higher. So, it does still look constructive. Here's NASDAQ on the daily chart, by the way. But it's a real acute channel, super sharp. Divergence in overbought condition. Again, not a strong divergence signal, not a reason to get bearish, but certainly a little bit concerning. Contractionary daily ranges, but you're still moving higher. Drill down deeper. Here's the 4-hour chart. I mean, you can't get tighter than that. That's from March, guys. It's insane. So, you're looking at slope, 31,400. I would want to see support hold basically near those swing highs. So like 29,700 right there, the swing highs from last month. That would necessitate a break of the channel too. But the least conviction out of all of them. It's still a breakout. It's still constructive, but looks a little tired. Now, the Dow is the one that looks like it has the most room to play catch up. So here's the Dow. Remember, the NASDAQ and the S&P had wonderful, spectacular breaks of the yearly opening range, right? Here's the S&P. Here's the NASDAQ. Beautiful breaks of the yearly opening range. You're looking for a third, fourth quarter high in both of those. The Dow just broke the yearly opening range last week. Just last week. So there's some room here. So initial support, 50,271. That's the 618 that caught the rally. That's the 618 extension from the breakout of last year's opening range. That's initial support. I'd want to see any pullbacks hold the high week reversal close from February. That's 49,500 if we're heading higher. Next levels on the upside, 52,000 and 52,951. That converges on uptrend resistance for the multi-year upslope we've been in since 2022. So looking to see if we can't get a little bit more of a topside play here. You're not even in overbought territory. So like I said, there's room to play catch up. It's just, does the Dow 30 do those 30 stocks have the push to get the go? Here's a breakout. I just want to show you how last month's opening range was very clear. Here's last month's open. You set a low, you set a high in the first 7 days of trade. You get the conviction break on the 21st. You close not too far off the highs. So the opening range has been pretty decent here for the Dow. Let's see how we open up the calendar month for June. But there's room here. If this is a legit breakout, there's room. All right. Made good timing today. Any other questions or trade setups? Remember, the major event risk for the week, 10 o'clock, right after our call here, we do have the ISM figures, okay? So watch for that. But the big heavy hitters are going to be the ADP on Wednesday, looking for 116. Non-farm payrolls on Friday, looking for 96,000. We get those Canadian employment figures on Friday as well. So watch dollar CAD specifically on this advance. DXY trading right below resistance, right? On the near-term charts, we're looking for what kind of reaction we get off 99.50. Key support 98.69, 98.59 or 58. Euro dollar, really well-defined range into the start of the month. Sterling dollar right below resistance, but a low conviction trade. Aussie, if we break that 71 level, bigger correction. Dollar CAD, still looking to see if that dollar CAD can hold that support. Okay, if we hold 138.77 That's the breakout that would mark resumption. And dollar Swiss or dollar yen trying to break resistance. Dollar Swiss is the one that looks a little provocative as you head toward that 78, 75 level. Look for a reaction there. Quick walkthrough, quick summary. I'll catch you in the opening belly, man. You too. Chandra, you're more than welcome. Guys, thank you for keeping this FOREX.com's most widely attended webinar. Stay nimble early in the monthly opening range, early in the weekly opening range. We're likely to get some nice plays here as some of these ranges start to get tested. And obviously the main event risk as we head to the end of the week on Friday. Best of luck trading. I'll see you next Monday, same time, same channel. Forex VIP guys, I'll see you in the opening bell in just a couple of minutes. Till then, best of luck trading, guys, and God bless. Cheers.